Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're having a wonderful weekend so far. So last week we did skip an episode because, well, there was literally nothing else to add because we had the earnings report, the earnings call. So we did an episode on that already a couple of days beforehand. If you missed that, it's going to be in the top right corner. Now, right now, just so you know, Tesla is basically flat year to date. And for the last 3 years, it's down close to 33%. Now, I'm saying this because I've seen a lot of hate towards Waymo. Maybe it's because their co-founder and CTO said that Tesla's tech for full self-driving is not going to work, etc., etc., and that's why some Tesla's bull are taking their anger on Waymo as a company. They're never going to work out. They're going to go down, etc., etc. It's dead money. Well, I don't know. Sometimes you have to look in the mirror because Tesla has been dead money for the last 3 years, right? If you look at this, down 33%, while the market has been up quite a lot in the last 3 years. So sometimes being humble is maybe the way to go. That said, I do expect Tesla to outperform for years to come. Now, currently, Tesla has a market cap of just under $800 billion and a forward PE of 80.6 times. How expensive is the stock compared to its 5-year mean? Well, it's actually pretty close to the 5-year mean. Forward PE, V to EBITDA, price to sales, price to free cash flow, price earnings to growth is actually quite high, 5.5. Now that said, let's look at what analysts are expecting from Tesla. So for fiscal 2024, they expect sales growth of just 3.5% year over year and free cash flow to be down 18.1%. Then moving to fiscal 2025, they expect free cash flow to increase by 107.4% and sales to increase 16.4% year over year. Then moving to fiscal 2026, they expect sales growth to grow 17.8% year over year and free cash flow to increase close to 30% year over year. So yes, you can see company is expected to grow more in the coming fiscal years, although I still think that these year over year growth numbers or expectations are a bit low, in my opinion. Free cash flow wise, yes, I do believe that Tesla is becoming now more and more profitable. We can also see this right here from free cash flow perspective, last 12 months and operating margins. We peaked Q3 2022, Q3, Q4 2022, no secret there. Then we went all the way back down and finally now we think, well, I personally think that we might have bottomed and we're back on the way up. They did say that Q4 margins could be down a little bit, but overall as a business, I think we're heading in the right direction. We're going to exit 2025 in a much better shape, free cash flow wise, margin wise as well. And remember, Tesla is still investing quite a lot, right? They said, I think CapEx is expected to exceed $11 billion for this year. And I think next year is going to be the same, $10 to $11 billion. And after that, it's expected to come back down a little bit. But of course, we know plans can change, right? Suddenly they might see that the market, that there suddenly is a lot of demand for electric vehicles. And maybe they're going to build another gigafactory, whether it's the one in Mexico, maybe in India. Who knows? Actually, more on that a bit later in this video. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the Tesla weekly numbers that came in at 10,500. If you're a member of the channel, you already got these numbers throughout the week in the updated Google Sheet. So the number was 10,500. We're down 18.9% quarter over quarter. Year to date, we're still up 6.5%. Now, if we look at what's happened with Tesla Model 3, for example, compared to the Xiaomi SU7 and the new Xpeng Mona M03, we can see that, well, October has been extremely weak for the Model 3 and the other two models have picked up the pace. Switching to Europe, well, some European countries, always the same ones. So week over week, we're up 42.5%. Quarter over quarter, we're up 35.7%. And year over year for this week, we're up 26.1%. Overall, for these specific countries, which are UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, and Czech Republic, year-to-date sales are up 13.1%. Yeah, of course, this paints a better picture than what we know it is, right? Because if you include Germany and France and some other countries, then the picture might not be as rosy as this one. But then again, you also don't include Belgium here, for example, which has had quite a good year, and some other smaller countries have had some good years as well. But yes, the big markets, Germany, France, not so good for Tesla this year. Moving on to some more positive news. So the S&P Global Mobility estimated that the battery electric share of automobile sales have been above 8% every month since June, which reflects progress from levels seen earlier this year. The rating agency forecasts September and October BEV market share will reach above 9%, helped in part by higher incentives and discounts on key electric vehicles. As for California, we've got this report, California Auto Outlook. We can see here the top 15 selling BEV and plug-in models year to date through September, so the first 9 months of the year. Number 1, Model Y, number 2, Model 3, and then number 8, outselling the others, outselling the Rivian, outselling the Ford, the Tesla Cybertruck. Staying on the Cybertruck topic, Ford will completely stop the F-150 Lightning EV production in 2 weeks for the rest of the year due to weak demand. And so, as Sawyer writes here, Tesla is on track to sell around 2.5 times more Cybertrucks than Ford will sell Lightnings in 2024. Now, as I said at the start of this video, with regards to India, apparently there has been a report saying that the IT Minister for Indian State, Andhra Pradesh, Lokesh Nara, I'm sorry if I butchered that name, met with Tesla CFO. I'm not even going to attempt to read this one here. So they met at Giga Texas earlier this week. Is it to discuss another Gigafactory? Is it to discuss maybe a Megapack factory? Remains to be seen, but yeah, it's no secret that India is a country where a lot of companies are investing a lot in. I mean, if you want to diversify away from China, you just have to look at India. Now, switching a little bit towards the autonomy discussion, right? For Tesla, they expect to launch paid drives next year, right? Is that going to happen? Remains to be seen. I mean, we know that Tesla is usually late, but okay, they are expected to launch that next year. Right now, Waymo already offers driverless rides, right? Paid ones. Actually, now Waymo One is now providing over 150,000 paid trips and driving over 1 million fully autonomous miles every week. Now, I know, okay, but the cost to build one Waymo One car is significantly higher than Tesla's. How are they going to scale, etc., etc.? Okay, fine. But from your perspective, you're a customer. Do you care how much it costs Waymo, Google to build this? Or do you care more about your experience with the car? Because, I mean, I'd never tried it, but I'm sure some of my viewers have. And to be honest, it might be pretty sick living in those areas where these things are available, where you can open an app and you order a vehicle and it comes to pick you up and there's no driver. Yes, I've heard that sometimes it does take a while until the car arrives. It costs also a little bit more than the usual ride, maybe even on Uber. So, okay, that's definitely something they will work on. And to be honest, yes, the cameras, the radars, LiDAR and all of that, it's expensive, but it's expected to become cheaper throughout the years. And to be honest, do you really think that Waymo will continue building those cars at the same cost, or do you think they will succeed and reduce it significantly and then scale up? I think that's the case. Now, will it be as cheap as Tesla? Probably not, because Tesla owns the whole thing, right? And they don't have all of this expensive equipment on top of their cars. So, okay, but the hate that Waymo gets from some Tesla bulls, to me, is a bit strange, right? Because as Tesla shareholders, we always complain about, oh, why are you hating on Tesla? Well, why are you hating on Waymo? Say thank you that Waymo exists, because they are paving the way towards a widely accepted autonomous transportation era, because they already exist. They are already on the roads without any drivers in the driving seat. So yeah, say thank you and try it and then come back to me. They also closed a $5.6 billion Series C funding, which I believe valued the company at around $45 billion. Switching to the other autonomous news here, and that's Zoox. Their robotaxis are finally coming to San Francisco and Las Vegas. And I believe it was Zoox's CTO and co-founder that said something about Tesla and not Waymo's. So apologies on that. I just remember. To be honest, this one, it looks like a funny vehicle. But again, the more of these things get into the wild and get accepted regulatory-wise, it's great for all the other players that are going to enter in that space because you will know what you need to be doing in order to be accepted. Plus, the more people get exposure to this, the better it will be, right? I've said this again and again with regards to Uber. It is thanks to Uber, in my opinion, that a lot of people have exposure to electric vehicles. Most of my Uber rides have been in Tesla Model Ys. If it was not for Uber, I would have not been in a Tesla Model Y for a long time. The same here I will say about autonomous vehicles. The fact that you can order or you will be able to order autonomous vehicles through the Uber app will just increase people's perspective, maybe even in a very positive way towards driverless cars. That's just my opinion. Maybe I'm just too optimistic for once. And all of that, of course, will benefit Tesla whenever they will officially launch their Cybercab. Of course, up until the Cybercab, they can release and launch the unsupervised FSD. And so, yeah, that will come earlier than 2026, 2027, or at least that's the goal. And then when they launch the Cybercab, when cost per mile is supposed to be 20 cents and the cost to build a Cybercab is much lower than the competition, etc., then yes, then we can start talking about, well, the big numbers that Tesla will generate each and every year. But up until then, we should be grateful that these other companies exist and already operate today. To conclude, this week has been a red week for Tesla after the big green one last week after the earnings report. Also a rebound above that 200-day moving average, so that was great. But now we're back to the same area we've been before where, yeah, maybe now 250 or so could become a base, right? We can form a base. I personally think, yeah, that the stock market, maybe Tesla specifically, is waiting until the election is over to make the moves up or down. I think the market also doesn't like uncertainty. So once the election is over, no matter what happens, the market is like, okay, that's going to be the result. Let's move on. And we're going to continue our way up because, in my opinion, right now, earnings season has been quite good, especially for the big tech companies. They've shown us again and again that the bigger they are, the better they become, the more profitable, and they're still growing faster than some small unprofitable companies. So yeah, quite an interesting period we're in. So overall, that's about it. That's all I've got for you in this Tesla Weekly episode. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.